Good morning, traders. It's Friday, March 23rd. Taking a look at the charts, we got the daily chart of the SP 500 futures, and more or less we had a pretty big drop yesterday. Huge selling in the market. We saw the volatility spike up, and in overnight trading, we saw what looks to be some potentially a little bit of a washout low here. Ideally, I'd like to see the market actually flush down a little further, see the VIX spike up more. But in overnight trading, here's today's bar. Last night, the market sold off, and this morning, and just in the last little bit here, rallied back to be relatively flat, actually slightly positive from yesterday's close. So the market's trying to put in a bottom. Overall, we do have our short-term momentum cycles putting in a low. And this is a nice kind of big flush in the market going forward. Now, if we take a look at the Nasdaq, Nasdaq is flat on the session, but it's the same type of thing. It's sold down in overnight and pre-market, and it started to rally again here this morning. And if we take a look at the VIX obviously had a nice pop there yesterday. In overnight trading, the VIX went up a little bit higher, but really do want to see some type of big expansion. Love to see something pop up into the high 20s, low 30s, and that would signal more of a significant pivot low in the market. But we might not get that. We'll have to see how things unfold. Overall, the markets are mixed. We've got some of the indexes trading technically in a short-term downtrend. Some of them are neutral with orange bars. So we're just kind of really mixed in where the markets are at this point, and we're letting the market try and stabilize, and we'll see what happens today. Friday, pretty big down day in the market in general, or down week in the market. We might see some short covering into the close today, but we'll see. If there is fear still lingering, we could very much see a weak close and a huge gap lower on Monday, which would be ideal. That's kind of what I'd like to see. That would be good for our SRS inverse ETF. And that's kind of how market sentiment would play out if we have a very strong, a very weak close, I guess you would say, closing near the lows of the week or the day today. Monday, we could get a gap to the downside, and that would be a spike in the VIX and potentially hit our first target in SRS, depending how the markets move. So let's just take a look. Pretty much everything was down yesterday. The only things really up were gold, bonds, and utilities, which are the three kind of most safe havens that people tend to go to. So if we take a look at bonds, yesterday, huge pop. They were pushing up near the highs. They ended up closing back down a little bit here by the end of the day. Today, they're trading a little bit lower. If we take a look at utilities, XLU, it was up huge. It was up 1.7% yesterday, trading right up near these highs. It's a pretty big chart. If we look at the drop that we've had here, pretty big downtrend. It looks as though it's trying to carve out a bottom. We'll see how things start to unfold here. Ideally, a nice bullish formation would be more or less price just fades slowly down here and then eventually starts to hook up and potentially put in a double bottom here, double bottom here. That would be ideal. We'll see what happens. This is forming a potential pattern, a bull flag here from this little run up, and we could start to close above it. I think it does have good potential as a fear trade. Money will slowly keep creeping into there as investors get fearful. Looking over at precious metals, gold and silver both up very nice this morning. Gold's up 1.4% this morning. You see this big blue, green bar. And nice pop there. If we look at silver, it's up 1.3% this morning, up near yesterday's highs. And gold miners, you can't quite see, but gold miners are trading at yesterday's highs. So there's GDX. Here's GDXJ. So trading right up at yesterday's high at 32.65. 32.65. So trading up near above yesterday's highs at this point, the GDXJ. So showing some really good strength. We're waiting for this big pop and hopefully a run in the juniors here to start to pick up speed here. Looking over at energies, natural gas down 1%, continues to fade down. We showed this in the video yesterday. We've got cycles bottoming out over the next couple of days. Maybe next week we get into another little bottom down here and oversold, and we might start to see it have a pop up in price. You can see all the cycles here are clustering in this lower zone, so it's getting overdone to the downside. But let's just take a look at the weekly. It is a critical level on the chart. If you look at this weekly chart, we do have support more or less across this level. And if this level is broken, natural gas is going to sell off very quickly. First level will be around the 220, and then more or less somewhere from there on, there's going to be several different levels. There'll be one level through here. There'll be another significant level down here, which is a long ways down percentage-wise, but that's if you look at the high of this pattern and you measure it down, you take that same pattern, you can move from that topping formation and go down, and it's potentially a big sell-off. So natural gas could really crash here going forward. We were hoping for a stronger bounce out of this back up into this upper range somewhere up in here, but it has underperformed. More or less, it's moved down. It's formed this tight little bear flag at this point on the weekly chart, starting to move lower. If it closes below this level down here, it could be lights out. We could see natural gas really pick up speed and go into some crash mode. So that's kind of where we're at with natural gas. Crude oil up 0.9 or 0.9%. This is the weekly chart, and I'm just going to go back to the daily here. Daily charts popped up, consolidated a couple days. I think it's got potential here still to pop and run and test this 66. Pretty darn close to it, 50, 65, 70-ish it got up to. So more or less it's got up into this recent high. The question is this going to be a little consolidation and for it to continue to go higher? If we throw a Fibonacci extension on there, let's just see where the 618 is. If we go from the low to the high down to this low. Okay, so it blew through the 618. It's kind of holding above that support level. So yeah, it might make one more push higher, but overall, this bull flag that formed in this little breakout, that quick fast move is more or less done. Now it's stuck into resistance, and not a whole lot more upside to go at this point in terms of that chart pattern, this chart pattern that we saw here. Let's just see what else is there. Let's go to the TSX for a minute. Down 1.7% yesterday. Pretty big day, obviously. Crude oil down, stocks down in general. We saw a lot of things dump out, so it is moving back down. In the grand scheme of things, the markets could be having a very bearish pattern forming here. We're going to have to see how things unfold, but more or less this is a big downward move. You could argue this is a giant bear flag in stocks. And if you look at the NYSE, NYA, the New York Stock Exchange, and let's check out the monthly chart. All right, let's check out the weekly chart. I think one of these looked really bearish. There we go. The weekly chart looks scary. That is NYSE, which is the big board. It's the big brand name stocks. Is where the masses of the investors put their money. It's below what we saw a few weeks ago, and it's trading down there. This is a very bearish sign. And if we were to throw a Fibonacci extension on here to see where the downside target is, we've got the high, we've got this low, we've got this high. Let's bring it forward. There's potential for the NYSE to collapse all the way down to this 11,400 area. First stop would be the 618 happens to be also a bottom where the spike low was. So obviously if it comes down to the 618, there would be some big money jumping in there as a double bottom bounce. There'd be a technical bounce there, I would think, almost for sure. And then from there, if that technical bounce fades out, it's lights out. So this is a really bearish sign, and I came across this last night just jumping through the indexes, and to me the big board kind of leads the market. It's kind of what the masses are doing, and the money's been moving out. The fact that we're below this low here is pretty scary. We'll see where it closes on the week today. If it's a weak close, it could be really bad next week in the markets. Let's just take a look over at the financials. Financials, big player in the market. Pretty bearish formation here. Big gap and drop, and then it's kind of rallied back up in near the highs, and it's continued to move down. Very similar to the NYSE. It's actually trading right near these lows. It's underperforming, and financials, we posted some articles a while ago talking about how the loans and debt that banks are having we're starting to go into foreclosures. We're starting to get loans not being paid back. So banks are starting to feel the pressure, and I think it's going to be pretty ugly for them going forward in the next couple of years with rates rising and potentially a major bear market in stocks, and just the economy eventually will soften. Remember, the stock market rolls over way in advance before the economy does. So yes, the economy is still humming along, but stocks roll over before that actually happens, and then the economy rolls over later. So this is foreshadowing that maybe there's a lot more weakness to come in equities going forward. Anyways, that's it for this morning. We'll talk to you in a little bit. Bye bye.